Hello everyone. A very warm welcome to your own Silicon Valley Tech Talks channel. This is your host Faisal Wattu from Berkeley, California. Silicon Valley has amazing talent pool. People from all over the world have traveled to Silicon Valley across last many decades and have contributed to technology and innovation built in the valley. One of the main contributor to the talent pool of Silicon Valley is University of California, Berkeley. I'm here at the Berkeley main campus. Today, we'll be talking to Greg La Blanc, who is a distinguished teaching fellow at UC Berkeley Haas School of Business since 2004. Throughout his career, Greg has taught courses in domains like strategy, data, and finance. Greg's current focus is fintech and digital transformation. Greg also teaches at Stanford University, which is another distinguished institution in Silicon Valley. Greg also hosts a podcast called Untitled, which is focused on connecting people based on stories. In this first segment of the discussion with Greg, we're going to focus on fintech, cryptocurrencies, Bitcoin, and blockchain technology. Those of you who are not familiar with blockchain technology, it is basically a decentralized and distributed digital ledger technology which enables people to have a shared database of records. Blockchain is a foundational technology for cryptocurrencies like Bitcoin. In traditional centralized database, the whole database is owned and controlled by one entity, which could be a bank or government, etc. Whereas in decentralized database like blockchain, the whole network consists of computers, also known as nodes, which are distributed across different locations. The core value of blockchain is decentralization, which avoids single point of failure and also enables more transparency, security, and efficiency. If you want to learn more on blockchain, I will share some tutorial on blockchain in the description of this video. Without any further delay, let's go and talk to Greg and learn from his experiences and expertise. Hello, Greg. Welcome to our show. Thank you so much for joining. How are you doing today?
Great, Faisal. I couldn't imagine a better person to talk to than you about tech-related topics.
Thank you. My pleasure. Greg, I'm going to ask you a few questions about fintech, crypto, and blockchain, etc. First question is that Bitcoin was launched in 2009, and since then, we have seen a lot of fluctuations, a lot of ups and downs. We have seen bull runs in 2013 and 2017, outrageous increase in prices, and then we saw major price corrections in 2015, 2018. So Bitcoin and cryptocurrencies in general are very highly volatile. Why do you think they are so highly volatile, and do you expect these patterns to continue in future?
Yeah, I mean, there are a couple different things that kind of flow together into this thing that we call kind of the cryptocurrency movement or the blockchain movement. Part of it is about the emergence of a new technology, right? Part of it, and I would have to say that it's not even like a new technology. A lot of the technology is really a bunch of older technologies that were kind of arranged or compiled, right, in a new configuration. And we can talk about some of the realistic projects that are going to flow from that. But we have to also remember that the cryptocurrency movement was also a speculative movement, right? It was an opportunity for people to engage in a lot of gambling, right, and a lot of hype, right? And so when we're looking at the value of these cryptocurrencies, it's impossible to understand those price movements without understanding, the sentiment, the desire for gambling opportunities and speculation opportunities.
Right. And do you expect these patterns to continue, or do you expect some regulation or changes which will stabilize cryptocurrency pricing going forward?
Yeah, I mean, every kind of new technology gives rise to sort of, big bubble, which then, crashes. So for instance, when the bicycle was introduced, most people don't know this, right? When the bicycle was introduced, there was this massive run up in all these bicycle stocks, right? Which then later collapsed. We saw the same thing with the railroad, right? We saw the same thing with new kinds of derivatives and asset-backed securities and so forth. Now, this was primarily one that was driven by by retail investors. And so, of course, as that froth subsides, we should see stabilization. But also, as you said, there will be more and more regulation. The SEC has just announced that they are going to start treating a lot of these cryptocurrencies like securities, right? And that's going to seriously impact people's capacity to launch these new projects.
Right. Bitcoin was supposed to solve problems with fiat currency. Fiat currencies are controlled by the government, and government has much more influence on how they work, right? So obviously, we expect some backlash from governments against cryptocurrencies and Bitcoin, and we have seen some examples recently with some of the steps SEC has taken against certain banks who were supporting cryptocurrencies. So, do you think that Bitcoin or cryptocurrencies have potential to become currency of the world?
No, right? No, I don't think that was ever a realistic possibility. Partially because it's very, very difficult to escape the sovereignty of governments, right? I mean, there's so many different touch points where if you want to take your money out of the Bitcoin ecosystem and put it back into the fiat ecosystem, which still dominates, you have to go through a financial institution, right? A lot of the people who are transacting in Bitcoin are usually using some kind of wallet or exchange, which has a good old-fashioned relational database, right? Which has some kind of exists underneath some jurisdiction, right? So it's really difficult to do things in a way that doesn't touch on the legal and official financial infrastructure. Okay, so that's number one, and then number two, right? The technology that sits behind Bitcoin, at least, is it's very clunky and it's very frictionful, and it's not something that you would design for ease of use, right? I mean, that's not why it was designed. It was designed because they wanted something that could exist in a world devoid of trust. And ultimately, right, there isn't the need that is strong enough to justify those inconveniences, except in areas where you have illegal activity going on, right? So the number one use case for, say, Bitcoin is to this day, ransomware attacks, illegal activities, and so forth.
Oh, I see. Okay. If I step back and look at the core problems it was designed to solve for, and let me list those examples for the audience benefit as well. One was, hey, fiat money, you put it in the bank, but you don't really own it. Bank or government can seize it anytime, and you can lose all your money, right? And then fiat money, governments are printing, inflation happening. Third, some people, and I was seeing some figure like 800 million people in the world can't open a bank account for certain reasons. So you can't open a bank account. So how do you do transactions? So all these like three examples I gave you, Bitcoin or cryptocurrencies were supposed to solve these problems. So if I ask you today, do you think Bitcoin has been able to solve these core problems it was designed for or not?
No, I don't. I don't think it does solve those problems completely. And also, there are other ways to solve these problems that are maybe better. I mean, let's walk through each one. So, yes, if you keep your money at a financial institution, the government can seize it. But if you keep your Bitcoin with a wallet or exchange, then the government can also seize it, right? If you keep your private key on a USB, the government can seize your USB, right?
Yeah.
So it's very difficult to escape the hand of the government. Okay, that's number one. The second thing is, right, the risk that you run the incremental risk that you run due to seizure of the government is usually offset by the incremental benefit of government guarantees, right? So when you put your money into a federally insured depository institution, then you are protected against fraud. You're protected against the bankruptcy or insolvency of the institution and so forth. So at least in the developed countries, the kind of trade-off is usually not worth it. Now, with respect to the unbanked, this is a real problem. However, there are other alternative solutions to this. So in Africa, for instance, in Kenya, we have something called M-Pesa, right? M-Pesa is a very simple and easy way to give people access to transaction services without the need for any kind of bank account, right? If you look at things like Alipay and WeChat Pay, there's no reason why you would need a bank account to use those types of products or services. Now, of course, the Chinese government does require some kind of KYC and so forth, and so whether you need a KYC or not is separate from whether or not the technology is available for you to transact value without a bank account. So that problem also can be solved. And what was the third?
Inflation.
Inflation. Yeah, I mean, the great thing, I think one of the coolest things about Bitcoin is that it does have very little in the way of monetary discretion, right? So in other words, the money supply is algorithmically limited. Now, look, we could do a fork or something which would eliminate that, right? Just like a monetary authority can commit or pledge to low inflation and then change at some point. So you could change the code and boom, now all of a sudden you've got yourself inflation, right? And there's no guarantee against that.
Oh, I see.
So yeah, it would be great if we could design institutions for fiat money where there was less discretion, but that comes at a price as well, right? If Ben Bernanke didn't have the discretion to radically increase the money supply in 2008, we would have serious depression, the kind that we had back in the 1930s. So there are definitely pros and cons associated with each of these things.
Got it. That brings me to a follow-up question. How do you compare cryptocurrencies with CBDCs, central bank digital currencies?
Right. So to be fair, like a CBDC it's very different, right? It's very different. First thing to keep in mind is that all money is pretty much digital already, right?
Yeah.
So whenever I don't know about you, but I have very, very few dollars, in my pocket. All my money is already digital. So the key thing about a central bank digital currency is that this is more of an organizational innovation than a technological innovation, because what it does is it gives everybody a direct depository relationship with the Federal Reserve or with the central bank, as opposed to with the chartered banks.
Got it.
Okay, and if you're concerned about the insolvency of your bank, then this might be a good thing. But as we've seen, even with the collapse of Silicon Valley Bank, it seems that there's relatively little risk of you losing your deposits, right, with an ordinary banking institution. The other potential problem here is that when you suck all that money out of the banking system, then it pretty much dries up the money creation and the loan creation that banks do. So if it's the only way to facilitate kind of ease of transacting between you and me, then it's a wonderful innovation. But it doesn't really do anything that you couldn't do right through your ordinary financial institutions. Now, I think the one thing you didn't ask me about are stable coins. And
I was actually going to mention that.
Yeah.
So go ahead.
Right. Now stable coins are actually an interesting twist on the cryptocurrency idea.
Yeah, because we can avoid the price fluctuation, less
Exactly.
risk.
Exactly. And then you can use, now right now stable coins are used pretty much only to buy and sell other cryptocurrencies. But if you think that smart contracts have a place or have a role um, as a way of creating self-enforcing, self-executing contracts, then stablecoins would be a tool that would enable that, make that possible.
Great. Let's talk about blockchain. Blockchain is an enabler for Bitcoin. In your view, what's blocking wide-scale adoption of blockchain as a technology? Because blockchain has its use cases, not just crypto, but now other areas like supply chain, healthcare records, voting system, and so on.
So, we have to be very careful because, I've been teaching these courses on blockchain for the last couple of years. And a lot of times, right, when we talk about blockchain, we use a different definition every time, right? So sometimes we're talking about append-only databases. Sometimes we're talking about, right, different types of consensus mechanisms, right? Sometimes we're talking about, distributed ledgers, and you can have like some of these planks and present and some missing, and sometimes you can remove enough of them and it doesn't really resemble blockchain in any way, and yet we call it a blockchain, right?
Yeah.
So before I dig into the specifics of what I think new applications are, we have to remember that the biggest value of this conceptual revolution that we've seen is that it forces us to rethink everything we do. Now, it may wind up taking us right back to some old solutions to these problems, but we'll do it in a new way. So the thing that I think is most important is, first of all, digitization, right? And digitization has to precede everything. And so a lot of the blockchain initiatives that have been launched in the last couple of years have had the positive impact of forcing and accelerating digitization. Right. So if you think about supply chain, right? We've had so many clunky supply chain architectural IT systems over the years. And a typical supply chain might have lots and lots of links. You have tier 1, tier 2, tier 3, tier 4, et cetera, et cetera. You might have lots and lots of parts that are kind of flowing through the system, and then you have cash flowing in the other direction, and then you have information that is flowing everywhere. And because every individual player in this chain is managing their own database, and then sending signals and sending little packets of data to other people in the chain. At any moment in time, the various states of the world are not in alignment, right? And so this creates disagreement, this creates confusion, this creates lack of coordination, and it usually leads to disputes
and inefficiencies.
Yeah, right. And so I think that we've come to understand that if we can create a single source of truth for all of the relevant players within any kind of ecosystem, and we have a system whereby editing rights and viewing rights are assigned in a systematic and sensible way, then we can squeeze a lot of the fat out of these supply chains. We can reduce a lot of the transaction costs, ultimately lower the cost of financing these things.
Yeah.
Now, the question then is, do we need to do this in a way that lacks a central database, somebody who's managing this thing?
Yeah.
And in most cases, no. I mean, in most cases, there exists an opportunity for a player to step in and provide this role using traditional database tools.
And coordinate end to end.
Yeah. But the problem there is always governance. So the main reason why blockchain was introduced is not because of a failure of information technology, but of a failure of governance technology. We weren't able to figure out a system whereby a single entity could be trusted, right, to manage this information and not put themselves in a monopolistic position.
Got it.
Right. So if you have Oracle, for instance, or AWS, if you think, oh yeah, let's just have this centralized entity just manage everything, then everybody's concerned that they're going to either appropriate the information or they're going to charge monopoly prices. And so we want something that's much more of a cooperative or decentralized system, and that was sort of the idea behind using blockchain within these ecosystems.
Got it.
So whether it's supply chain or trading assets of various kinds, that's the idea.
Yeah. In summary, basically, blockchain challenged the status quo to rethink how things are done. And once people are now rethinking. They might still continue with non-blockchain solutions, but do the existing solutions in a better way, right?
Yeah, because blockchain it's a information technology and a governance technology stapled together,
Yeah, yeah.
right? And it arose because of, I think, so much frustration with the governance technologies, and it was frictions in the governance technologies that held back developments in information technology. And so, one of the reasons why we still have paper flowing around and why we have emails flowing around and WhatsApp and WeChat, bilateral communications floating around is because, no one was willing to entrust all of this to a single player.
Got it. Everyone is talking about AI today,
Yeah.
even though I'm here to talk about blockchain. But I want to understand what would the intersection between AI and blockchain would look like, or is it too early to assume or too early to imagine the use cases which could emerge?
Yeah, I mean, people have been talking about this since the emergence of blockchain, right? Um, and remember, blockchain is a database technology, right? It's a tool for storing data in a maybe a tamper-proof way, right? Through a append-only architecture and so forth. And it's not the most efficient way to manage your data, right? It has advantages, but it has huge disadvantages. So there's no technological need why you would want to put this data in that type of storage. However, if you are concerned about access rights, if you're concerned about visibility, if you're concerned about um, permissions, right, or there's some concern about trust, then certain aspects of blockchain might help,
Okay.
right? But we're seeing such a radical acceleration in machine learning and such a radical increase in the amount of data that we need to process, right, in order to train our models. It's going to be very difficult to afford the kinds of frictions
Which blockchain had?
which blockchain gives rise to, right?
Okay,
So
I see.
so the clunkier the technology, the greater the demand has to be for
To push the
governance
innovation. Yeah. Okay,
solutions
I see.
that would overcome them. Yeah.
Right. So basically, you don't foresee a lot of use cases yet because of the limitations blockchain technology has
Yes.
between AI plus blockchain.
Yeah.
Okay, I see. Okay, so Greg, next question I want to ask you is like broader in fintech. We talked a lot about cryptocurrencies and blockchain, but other than that, because fintech is your topic, right? What other innovations are happening in fintech which you think audience can benefit from?
Oh, okay. Now we want to talk about the real fintech
Yeah.
innovations, right? Well, look, I mean, you've already mentioned artificial intelligence and
Yeah.
machine learning.
Yeah.
I mean, you add machine learning to anything, and it's going to get better
Yeah.
if it's done
Hmm.
done well, if it's
Yeah.
done correctly. And so, we've seen the application of machine learning into every single aspect of finance, because finance is really all about information,
Hmm.
right? I mean, finance is all about
Information.
collecting,
Hmm.
aggregating,
Hmm.
and analyzing information, right? You're trying to analyze
Hmm.
and discover opportunities for investment. You're,
Hmm.
you're trying to, right, price risk.
Hmm.
You're trying to evaluate the impact of different contracting tools, right? You're trying to analyze the impact of different diversification strategies. So, whether we're talking about simple, B2C lending or B2B lending, right? Machine learning kicks in there, right? If we're talking about investment management, right? Machine learning kicks in there. If we're talking about insurance, right? Machine learning kicks in there. And there's two sides to this. One is the customer facing side,
Hmm.
and the other is the back end or the back
The
office,
yeah
right?
banks. Yeah.
And so in both areas,
Hmm.
right, fintech is radically transforming not only how customers interact with their financial institutions, but with how the financial institutions kind of manage everything that they do. Yeah.
Got it. So AI inclusion or intersection with fintech is bringing a lot of new innovations, right?
Absolutely.
Yeah.
Right.
Mhm.
Absolutely.
Thank you very much, Greg, for participating on our show. The insights you shared were really valuable, and I'm sure that audience would have benefited a lot.
Faisal, it's been a treat to see you again.
Great. Thank you.